watching KCOY CBS 12 at 6 o'clock with Katie Marzullo and Arturo Santiago. Sports with Dave Alley and Jim Byrne with weather.
California is one of the top 5 states in the country with the highest number of underwater mortgages. That's where the homeowner owns more on their mortgage loan than what the property is worth. KCOY CBS 12's Keith Carls is in studio tonight with a look at what you can do to stay afloat if you're underwater. Keith.
Katie, property prices in Santa Maria have fallen as much as 50% from their peak 3 years ago. Many homeowners are stuck with negative equity and an underwater mortgage loan that's slowly sinking them into a sea of foreclosures.
Negative equity is a harsh reality for Sandra Ayala.
My plans are to either try to short sell my house or let it go and go back and rent.
The Santa Maria native bought her home for about $500,000 at the peak of the market. It's now worth about half that, and she's been unable to refinance or work out a lower monthly payment with her lender.
They basically said there was very few options and none of them worked for us, so at this point there's really nothing else we can do.
It's a tragic story repeating itself in Santa Maria, which has among the highest foreclosure rates in the state.
1 in 5 homeowners owe more than the home is worth, and that's a troubling thing right now.
Mark Brown advises homeowners struggling with negative equity and making monthly mortgage payments.
And sometimes you can do what they call a mortgage modification. And that's the first thing you'll try to do, work it out with your lender. Secondly, if you can't, then you may have to work out what they call a short sale. That's where you try to sell the house for less than what you owe on it, and usually the banks will go along with this because it's to their interest.
Brown says a short sale will affect a homeowner's credit rating for about 2 years, as opposed to a foreclosure, which can last as much as 7 years.
Frankly, all the news isn't negative. There's the Hope for Homeowners Act. There is the bailout. There are programs right now that are still in existence that people don't know about that will allow them to get a better rate on the house that they're in right now.
Sandra Ayala says she's accepted the fact there may not be help for her.
It is, just having to think about, okay, where are we going to move now? But there are more important things than properties.
The federal government is still considering a $500 billion bailout that could help as many as 3 million troubled homeowners refinance their mortgages into more affordable loans. A framework for that bailout plan is still being worked out in Washington. Katie?
All right, time will tell. Thank you, Keith. States with the highest share of negative equity had either a sharp rise in home prices or a higher proportion of subprime loans.